Today is Tuesday, May 13th, and this is another update on my progress of beating the S&P 500 along with Bill Ackman's Pershing Square holdings. I do make these updates every Tuesday and Sunday, so if you want to follow along, hit that subscribe button and let's get into it. So we'll start off with position changes that I've made since my last update. I brought up the possibility of doing this move in my last video, and I did end up trimming 25% of my Dave position. It's had tremendous gains ever since it reported earnings, so I decided to go ahead and lock in some profits, because right now it's sitting at over 100% gain in my portfolio. The plan was to take the money that this sale generated and increase my Shopify position. When I did this move, Shopify was already up pretty big on the day, so I decided at that point it might not be the best time to increase my position, but if it continues to rise and it doesn't really show any signs of a pullback, I'll definitely go ahead and do that. But for right now, this money is just sitting in my cash reserve. And if we take a look at the SPY chart, you'll see on Monday and today we had tremendous gains. This blue arrow indicates where we were trading at on Friday, and at that point we were trading below the resistance level, but we were still slightly above the longer term green trend line. And I talked about the importance of not crossing below it, because if we did, that would be a pretty clear sign that we were going to be heading straight towards the support level. And if that was to happen, that would have indicated a 4.4% decline. And as you can see on Monday, the SPY price was able to shoot above the resistance level, which it wasn't able to do just 10 days ago. And then we saw some more gains today. So when the SPY price was below this line, it's acting as the resistance level. But now that the SPY price is above it, this is now going to be called the support level. So if we do get a pullback, it would be completely normal to drop back down to that level before bouncing off of it even higher. And that would imply a 3.34% drop. So now that the SPY price is back at this level, we're going to add in this line again, because when the SPY price was trading down here, it definitely wasn't relevant. So when the SPY price rose above this line, this became the new support level, and the new resistance level acted exactly as it should, because that's right where the SPY price closed at on Monday, before crossing above it slightly at the end of today. So it's always possible, but I don't think an actual pullback to this support level is likely. What I think is more likely to happen is the rally continues when we ultimately bounce off of this support level before moving higher. If we take out the support resistance in the longer term green trend line and add in the 5 and the 15-day moving average, you'll see it's exactly the way we want it. The SPY price sits above the 5-day and both of those sit above the 15. The reason I think the rally can continue is the market's shown extreme signs of strength. Ever since the 5-day crossed above the 15 on April 25th, we've pretty much gone straight up, and the brief moments of decline only saw us bouncing off of the 5-day moving average. If the SPY price was bouncing off of the 15-day moving average instead of the 5, I wouldn't be as confident in the markets, but only bouncing off of the 5-day is certainly a good sign. And if we take a look at the VIX chart, you'll see that it's finally been able to cross below the top end of its normal trading range. The lower the VIX is, the better stocks always do. So as you'll see, this giant spike was when the markets were tanking earlier this year, but as people regain confidence and stocks go up, the VIX chart will go down. I definitely don't think it's going to end up dropping all the way to the bottom of its trading range, but I could definitely see it settling somewhere right in the middle. Either way, it's definitely a good sign for the stock market. These are going to be all 14 of my current positions. Right now, Microsoft, Meta, Nvidia, Palantir, and Costco make up my top 5, and those make up 42.75% of my portfolio. Like I mentioned earlier, Dave is now at 103.24% gain, and even after trimming the 25%, it still makes up 7.06% of my portfolio, and it's currently my 7th largest holding. Shopify has also had some good days in a row. Since the close on Friday, it's at over a 17% gain, and has now gone from the red to the green in my portfolio. It's only a 0.13% gain, but it's at least encouraging to see it not in the red anymore, which only leaves me with 3 positions in the red: Nvidia with a 2.92% loss, PayPal at 12.43, and Mind Medicine at 9.22. I definitely think the Nvidia position's on track to get green. The PayPal and the Mind Medicine might take a little bit longer though. So after the sale of Dave, that does put me at 92.93% invested, which has me at 7.07 sitting in cash. I would like to see a pullback on Shopify before I increase my position in it, but if a few more days goes by and it looks like a pullback's not likely, I'm just going to go ahead and do it anyway. Other than that, I do think I'm going to keep my portfolio exactly the same. Since Monday, my portfolio had a gain of 4.06%, Pershing Square had a gain of 3.31, and the S&P 500 had a gain of 4.01, which brings us year to date. My portfolio has a gain of 10.46, Pershing Square sits at a gain of 3.36, and the S&P 500 has a gain of 0.38. That's going to do it for today. I do make these videos every Tuesday and Sunday, so if you want to follow along, hit that subscribe button, and I'll catch you on Sunday.